Welcome to Options presentation by Eurotrade Investment Bankers. Real estate options can take many forms. The most common type of real estate option is a lease option. It is actually a transaction that has two parts to it. A tenant is given a lease, and that same tenant is given an option to purchase the property that they are renting. It's very popular amongst real estate wholesalers because it allows them to make very large profits without actually having to put money out of their own pocket into the transaction. At times they may put a small deposit down, but that is returned almost immediately by the tenant buyer, who actually is then sold the lease option which the real estate wholesaler has acquired. That being the case, there's no money out of pocket for the real estate wholesaler, and therefore the ROI is infinite. There are also multiple streams of income. Firstly, there is the option fee which the tenant buyer pays to the real estate wholesaler for for the option, and then there is the rent component, which generally the tenant buyer pays above the market rate for rent, with an allowance going towards the purchase price. At times, particularly where there are sandwich options, the real estate wholesaler ends up making a capital profit when the property is ultimately sold into the market or sold to an investor. There are a number of problems with lease options. I don't intend to go through all of them, just the main ones affecting the main players. The first person that actually gets affected is the seller, and there are two distinct disadvantages that sellers have with lease options. The first one is the seller does not receive full market value for their home at the time when they actually are paid for their property. The contract for purchase of the property is set generally early on in the piece when the option is first granted. At that point in time, the purchase price, it's pretty often close to the market price at that time. However, because there are a number of years to go before the option expires and is exercised by the purchaser, then it can be expected that the property's value will increase, and as the property's value increases, that means the seller is at a disadvantage because he does not get the market value on the day at which the property is finally sold. The next disadvantage that the sellers have is there's no certainty of the home being sold. They do not actually have a contract for the sale of their property. All that they have is an option which they've granted to a purported purchaser who may buy at a specific price, but there is no compulsion for them to purchase the property, and in a lot of instances they can just turn it down if in fact the market has declined, or if there are personal circumstances. It is therefore fairly hard to find sellers that are pretty willing to undertake lease options. There's two sorts of sellers that actually come along. There are those that really have financial distress and they need some help out, and this is where the real estate wholesaler actually can be doing a home seller a favour. However, there are also Another type of seller who is particularly disadvantaged, and these are those people who really do not have financial literacy, and they cannot understand, in fact, what the ramifications are of lease options and how they can actually be disadvantaged. So there can be quite unscrupulous real estate wholesalers involved in lease options. Not saying that all are, but there certainly are some. Another entity, another group of people who are adversely affected in the lease option transactions are the tenant buyers, and along with that you can even say the real estate wholesaler may be disadvantaged, particularly when it is difficult to find a tenant buyer who has sufficient deposit money to purchase the lease option. It doesn't do the real estate wholesaler much good if he's got an option on a property but cannot find a tenant buyer with enough money to pay for the option. Another problem the tenant buyers face is they may be unable to purchase the property at the end of the option term. This could be because of their own personal financial circumstances. It could be that they fail to qualify for a home loan. A lot of tenant buyers actually come along wanting to buy the property, but they have poor credit, and it is hoped that within the period of the option term that their impaired credit can be improved so that they can then qualify for the home loan. However, in probably about 40% of the cases, the tenant buyer cannot qualify for a home loan. Basically means their credit is not repaired. Now, a tenant buyer could in fact just decide not to proceed with the purchase of the property at the end of the option term. That basically does very little for the seller because as the tenant buyer has no obligation to purchase the property, the seller is basically left out on a limb with their property unsold. Now, another disadvantage that a tenant buyer has, it's very rarely recognised, but it's actually quite significant, and that is the time that the tenant buyer is still renting a property cannot count towards qualifying for the homeowner's tax exemption. You need to be living in your home for a minimum of 2 years in order to qualify for the tax exemption. For a married couple, there's a $500,000 threshold, and for a single person, it's a $250,000 threshold. But if you are the average buyer, you may in fact be looking at selling your property once it appreciates. Now, if you're a tenant buyer, well, you've got the term of the lease to go before you even qualify for the tax exemption, and it could well be that the market cycle turns against you and you end up turning what looked like a profit into no profit at all. It's hard to find willing sellers, as mentioned early on, and this is basically because the majority of home sellers want their house sold. They want it sold without delay, and they want it sold with certainty. They don't want to enter into an option contract where in fact it doesn't actually equate to being a sale at all, and they could very easily wind up still owning their house at the end of the option term. Sellers want money and they want it now, and lease options do not give sellers the money soon enough to be attractive to most sellers. It's also hard to find suitable tenant buyers. And a suitable tenant buyer is one who basically has enough money to put down as a deposit to suit the real estate wholesaler, because the real estate wholesaler is out to make money by selling the option to the tenant buyer. And in a lot of instances, the real estate wholesaler then just disappears, and it's the tenant buyer who is left there leasing the property and who will actually deal with the seller when the option gets to expiry. Now, there's a smart way around both of the obstacles which are facing the sellers and also the tenants to make it easier for the real estate wholesaler to trade property using options. The first is to actually give the home seller some certainty. If you remove the uncertainty which surrounds lease options by using a different type of option or completely different types of contracts, then half of the job is done in convincing the seller to actually give you their property. Now, you should remain as a principal in the transaction. What most real estate wholesalers do is they sell the option to the tenant buyer and then they disappear. The tenant buyer then is left as the person holding the option, and therefore the person who will proceed or may not proceed to purchase the property, but the real estate wholesaler is long time gone. If you in fact adopt a different approach, you've contracted, or the real estate wholesaler contracts with the seller, and the seller is certainly not going to be terribly impressed if the person that they've contracted with just disappears. You should actually remain in the transaction as the principal. Now, you can do this with the intention of actually selling the property, or at least selling the option to an investor, but not actually dealing with the tenant. Now, you could actually enter into a contract to buy the seller's home, and there are various approaches that you can adopt here. The first approach is a deferred settlement. Now, in the same way that an option might be set for 3, 4, 5 years down the track, you could have a deferred settlement for 3 or 4 years or longer, in which case you don't have to put any money down until you get close to the settlement date, in which case you then need to look at mortgages, or alternatively sell or assign the contract to an investor. Pretty much the same way that real estate wholesalers operate when they do an immediate assignment of contracts. You can also look at quite a novel approach, which is a wrap mortgage. A wrap mortgage is essentially vendor finance, where the existing mortgage stays in place. It's not, in fact, the vendor or the home seller who is lending the money. It is the same bank or mortgage note holder that remains in place, and the new, let's say, owner of the property comes along and has the advantage of the existing mortgage. There's also an advantage here for the person who takes on this wrap mortgage, in that if things go sour, it's very easy to get out of it, because the wrap mortgage does not commit you legally to any mortgage whatsoever. The existing mortgage remains with the home seller. Another approach is a call and put option. It actually needs to be used in some instances where the legislation does not allow wrap mortgages. So in some jurisdictions you cannot do wrap mortgage, in which case you get around that with a call and put option. A call option is basically giving the option holder the right to purchase the property at a particular price in the future, and the put option gives the seller the right to compel the other party to proceed to purchase their property. So thus there is some certainty given there to the seller, which, as I mentioned earlier, is a long way towards solving the problem that traditional lease options pose. Now, another way to avoid some of the problems is just avoid the tenant buyers altogether. Do not actually worry about trying to sell the option to a tenant buyer who may or may not have a deposit, and the end of the story is that tenant buyer may in fact not ever qualify for a mortgage and therefore cannot buy the property, or they may just decide to turn up their nose and not buy the property. So there is not terribly much attraction there to put a tenant buyer in to purchase the option at all, particularly seeing that the amount that the real estate wholesaler can receive is on average less than 5%. In some cases it's probably closer to 3 or 4%. There's some legal issues complicate matters once the option fee is above 5%. I won't go into that. You can read about it in Google if it interests you. However, in terms of tenant buyers, you should basically give them a wide berth in terms of the options. All you need then is a tenant, any tenant, to go into the property. Certainly you're going to make sure that the tenant is suitable, but you don't need that tenant to actually have any deposit to purchase the option, because you're not going to sell it to them. Now, who do you sell it to? Well, you can actually hold on to the option until expiration and then exercise it yourself, purchase the property, or you in fact could find an investor with money, and an investor with money is certainly to be preferred to a tenant buyer without money. And in terms of when you sell the option, you don't need to sell it immediately. You sell it immediately, you're not going to get full value. If, however, you wait for the property to appreciate a bit, you can then sell that option for quite a tidy sum, make a nice profit. So the longer you hold the option before you sell it, the more in fact you can make, provided the market is moving in the right direction. It's also possible by writing short-dated options where you sell them to investors. If the investor does not exercise the option by the expiry date, you can actually write another option, and you can actually do it over and over again during the term of the option that you've obtained from the home seller. Now, if you'd like to find out more, if you're interested in possibly becoming a real estate options trader, all you need to do is just click the button at the bottom. So click the button at the bottom to find out whether or not options trading is a suitable business for yourself. Thank you for watching.